Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
I'm Tim Stenovec in for Alex Steele. Mike Regan here from the Bloomberg News crypto team. He's team leader over there. He's in for Paul Sweeney. Or maybe I'm in for Paul, you're in for Alex. It doesn't really matter here.
It's all fungible.
It's all fungible.
Fungible hosts.
That sounds like you're talking about NFTs.
I
like
know. I've been too much time in the crypto markets.
Hey, something that's not fungible is what's going to happen when it comes to employment this week. We're going to get the June payrolls on Friday, despite the fact that it's a holiday-shortened trading week. 190,000 is what economists surveyed by Bloomberg are expecting. It would be a significant decline from the 272,000 that we saw in May, that being a big upside surprise. Let's hear what Amy Glaser has to say. She's Senior Vice President over at Adecco. She joins us from Ponte Vedra Beach, Florida. Amy, good to have you on with us. Usually you join us on days where we've already heard the numbers, but give us a preview of what you're looking for when it comes to payrolls on Friday.
Yeah, we're looking at another strong month. I don't think it'll be quite as white hot as May, but probably somewhere around the 200,000s. We're still seeing employers actively post for openings, and we're anticipating another solid month.
You know, Amy, I saw an interesting chart the other day that showed the ratio of job openings to the number of people seeking jobs. And, you know, the gist of the takeaway of the chart was that ratio is back to where it was before the pandemic. Does that make sense to you? Is this finally the quote unquote normalization of the labor market after the pandemic, or is there still work to be done to get back to where we were?
I think we're definitely in our new normal. I anticipate quarter three, quarter four, more stability in the market, but we're going to remain at about a 1-to-1 ratio of openings to job applicants. The real question is, can we match on a skills basis?
And what kind of skills are mismatched right now? You know, if I'm a kid graduating from college, what kind of jobs am I looking for in this environment?
Actually, they're the ones that are going to have a great opportunity because professional services, healthcare, we even see technology rebounding in the near future. So college degreed opportunities will continue to expand. I think the real skills gap that we will continue to see is in manufacturing skilled trades. And that should be the focus for folks as they're looking for future career paths.
But should that be the focus for people coming out of high school or people coming out of college? It's a big debate that's happening right now. This idea of the quote unquote tool belt generation.
It is the big debate.
And I can tell you as somebody who has to write checks for people who come over and, you know, trim trees and fix air conditioners, I can understand why.
Right. It's a great opportunity when you're in high school to really decide, do you want that career track to move into skilled trades, or do you want to take the college track? And it's really an individual decision for students. Now, I will say, oftentimes the career track is much faster. So depending upon as that alpha generation starts coming due in the next couple of years, what's their appetite to sit through years of schooling versus having those more gratifying immediate results?
And Amy, what are you expecting as far as wage growth or average hourly earnings, as they call it in the monthly jobs report? You know, there has been some cooling from that really strong wage growth that we saw in the last couple of years. Still above the rate of inflation, so there still is real wage growth. But what is the outlook there? Can we still expect above inflation wage growth going forward?
I think right now we'll still remain above, but not as white hot as it was. I see continued reductions. In fact, in that space, we see that employees are sticking more at their current companies and focused on stability versus hopping for $1 or $2 more at a competitor down the street.
We got the JOLTS numbers. It was only yesterday. Seems like a long week, Mike, but
this week's lasted a month, I feel like.
It has lasted a month, and it's only Wednesday. I'm wondering about the JOLTS number. Was it sort of it was not Fed friendly because it showed that there were actually more openings than expected. Was that, what does that say about what's going to happen on Friday? Does it show that the labor market is not cooling like we thought it was?
I think, again, it's going to show it's not going to be an explosion. I don't anticipate huge surprises on Friday.
But do you change your view
still...
based on the JOLTS figure?
No, not necessarily.
You don't? Okay.
Amy, you had an interesting point you made in the notes you sent us, talking about what you call peak 65, when more Americans than ever will turn the age 65. What does that mean for the job market?
Over 11,000 every day in 2024 and beyond for the next 3 years. It's creating additional gaps in those skills as a lot of institutional knowledge and folks that have those skills depart. So employers are really being tasked with taking some steps now to help offset what's going to be happening with that skills gap. That's creating mentorship programs, investing in learning and development opportunities, and really partnering with their workforce planning to ensure that they've got a plan as more and more baby boomers retire.
I mean, how unprepared are we for this? Be
I would
candid,
say
please.
About half of the folks I'm talking to right now aren't as concerned with it as I think they should be.
Amy, I'm curious what you think about the so-called gig economy. You know, for a few years there, it seemed like so many jobs were being shifted to sort of a contract basis, a freelance basis. How is that trend playing out in this environment? Is that still the case where so many opportunities are sort of not full-time jobs, but gig economy type of jobs?
I think there are those gig-like opportunities. We're switching more to the terminology of flexible scheduling opportunities. We're seeing a strong appetite, especially in Gen Z, for those flexible part-time schedules. We're even seeing it in my generation, Gen X, as we face challenges of dealing with maybe childcare and elder care. So whether or not it's gig and a true contractor or platform, or it's just more flexible scheduling and part-time schedules, we will continue to see an increase in that in the upcoming years.
I do wonder about what that means, Amy, for people in insurance and benefits, because we live in a country and a society where your health insurance and your benefits are tied to your place of employment. And a lot of those flexible gigs don't offer that type of coverage.
I think it's an opportunity for those that do. And you'll see an offset in wages if that occurs. So if somebody's offering benefits for part-time work, you may take a trade-off in the salary to keep those benefits.
Well, good to hear from a fellow Gen Xer, Amy. We never get to talk much.
I think Gen X is like, I'll be honest, my favorite generation.
Is it?
Yeah.
What are you? You're a millennial.
I'm a millennial.
Yeah.
And I just Gen X doesn't get enough love, and it hasn't gotten
That's
enough
right,
love.
Tim.
And if but if you look around and you see like who are the next generation who are running companies right now, who are the folks who are the decision makers, a lot of them are Gen X right now, and I think it's really interesting.
Yeah, bound to happen, right?
Yeah, bound to happen.
Our day was bound to come.
Yeah. Hey, Amy Glaser, Senior Vice President at Adecco, joining us here from Florida. That jobs number coming Friday, of course, here on Bloomberg Radio and Bloomberg TV. We are going to have live coverage of that report when it hits at 8:30 a.m. Wall Street time, the day after the 4th of July.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We have back with us Bill Pulte, Chief Executive Officer of Pulte Capital. He joins us from Harbor Springs, Michigan. Bill Pulte knows a thing or two about housing because he is the grandson of the founder and chairman of the home construction and real estate development company Pulte Group, market cap of $22 billion. Bill focusing right now on home services, companies that do HVAC, roofing, siding, specialty drywall, flooring distribution. Pulte Capital is the name of his firm. Bill, good to have you with us. How are you?
Thank you. Good to see you.
Yeah, good to see you too.
No longer with Pulte Group, although I spent a number of years there.
Pulte Capital is what I meant, is what you're working on these days. But you do know still,
these days, yes.
Yeah, a thing or two about the housing market and housing in the country. And I'm wondering what you're seeing and what you're thinking when it comes to mortgage rates right now, which, as Abigail mentioned, are at 7.37% according to the Bank Rate 30-year index.
She made some great points. You know, when I was on the board of Pulte Homes a few years ago, the interest rates were at 2%, 3%, 4%. Now you have over 7%. The good news is that the builders have been able to take market share. The bad news is that a lot of the small home builders and affordability have really been hurt. I think you're going to see a situation, guys, where you see a little bit of price softness, but until these old homes start selling again, you're going to see prices stay pretty high. We've seen some resale of homes in Florida, for example, start to tick back up again. If that picks up nationally, I think you could see some softness in housing prices. But short of that, I think high prices are here to stay.
Bill, I remember a couple years ago when inflation really started to pick up, there was a lot of focus on lumber. Lumber prices had really skyrocketed. Obviously, a big expense line for a home builder. Lumber has come off those sort of really elevated prices. But I wonder if you could just give us a sense of the trends in inflation for all of the labor and commodities that a home builder must buy to build a home. Is there any sign of relief there beyond lumber, or are there still issues with high prices for the components needed to make a house?
It's a great question. What's interesting about home building, and not a lot of people know this, but the biggest cost of goods sold in selling homes is actually the land. And we have a situation where, with wood, for example, you can make more wood or cut more trees or build more trees. In the case of land, God didn't make, infinite land. And so you have a situation where, to your point, over the last number of years, the builders have had to lock down land. And because of the restrictions and regulations around zoning, that price has kept pretty high for land. So I don't mean to diminish your point about, utilities and wood and, kitchen appliances, et cetera. But when you look at the grand scheme of things, the land is the biggest piece in terms of cost of goods sold for the home builders. As it relates to wood and some of these other places, yes, you've seen softness compared to the dramatic growth that you had a number of years ago. But still, inflation remains high. Labor inflation remains high. And so you do have a little bit of upward pressure in the cost of goods sold with the materials portion, not just in the land.
So is that cost of land sort of the main piece of this housing affordability issue in the U.S.? And is there anything that can be done for that? Like you said, we can't make any more land, and getting municipalities to change those zoning laws is a tough battle, I assume. What could be done either from the federal level, from an investor level, to sort of make homes more affordable, especially for these young buyers out looking for their first home?
Great questions. Zoning has to be fixed. The problem, though, and you make a good point, is how do you fix those regulations? You could do things at a national level and ease up on some of the federal standards, but really it's a local level thing. And what we've seen recently, especially with some of the narratives around crime and around new home developments and stuff like that, is people don't want a lot of new home developments necessarily in their backyard. And so you're seeing a lot of these local municipalities not really wanting to build new subdivisions. And so to your point, you can build more wood, you can, make more appliances, but if that land is in tight supply relative to that demand, you're going to continue to have those land prices being high. So I think it's a tough problem to solve, and I don't see it going away, unfortunately, anytime soon.
Talk to us a little bit more about Pulte Capital and where you're seeing excitement or where you're deploying money right now. As I mentioned, you do HVAC, roofing, siding, windows, doors, a lot of services, specialty home builders. What's exciting to you?
Well, we spent a number of years, obviously, in the Pulte Homes business. And when you're a home builder, you understand which trades really make or break a home, which trades make more money. And so what we've tried to do is utilize our experience inside and outside of that company to say to ourselves, okay, where can we get businesses for the right price, grow them, and then sell them? And so one of the big areas has been, and this will come as no surprise to you and other people that follow the private equity market, has been the heating and air conditioning market. We've had three great exits. We've had three great buy and build strategies in the HVAC industry. We've sold those to different private equity funds. And so I think that you'll see HVAC continue to take speed. We've also done countertops, kitchen and bath type stuff, et cetera.
Hey, Bill, always good to catch up with you. Happy 4th of July. Please do come back and visit us again very soon right here on Bloomberg Radio. Bill Pulte, CEO at Pulte Capital, joining us from Michigan.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It's Tim Stenovec and Mike Regan in for Alex Steele and Paul Sweeney on this. Well, now we can say it's a quiet Wednesday afternoon because the equity market is closed, Mike.
Yeah. I don't know how we got stuck working past the close.
Hey, I'll just do what I'm told.
In market time, it's like 7 o'clock at night.
It really is. And, the unfortunate thing for you is crypto's always trading.
Oh, that is very unfortunate.
And now as crypto team leader,
I got to get that fixed.
You got to get that fixed. Not going to happen. I have bad news for you.
Holidays,
unless your name is Satoshi,
weekends,
you're not going to have any power.
Yeah.
Hey, speaking of holidays and weekends, we got the 4th of July coming up tomorrow. What's your plan?
Probably sleep in, maybe go for a bike ride.
Nice.
Some burgers on the grill. Nothing too fancy.
Okay, burgers on the grill. It's kind of what we're thinking about too. In the Stenovec household. One thing that is happening, though, is consumers are out there and they're choosing where to spend their money and how to spend their money. We got Katie Thomas with us. She's over at the Kearney Consumer Institute. She's lead there. She joins us from Pittsburgh. And we like checking in with Katie periodically because she's got a great idea of what the consumer is feeling and how the consumer is spending. Katie, good to have you with us this afternoon. How are you?
I'm doing good, Tim. I'm counting down the hours myself to when I can wrap it up for the week.
We'll definitely appreciate you taking the time to join us this afternoon. At the Kearney Consumer Institute, how are you watching holiday spending around the 4th of July?
Yeah, well, we're definitely keeping an eye on a couple things. So one area we are seeing people spend is obviously, like you guys just talked about, barbecues. So we tend to find that people like to spend on holidays, whether it's Halloween, Thanksgiving, your big winter holidays. People will make trade-offs in their day-to-day so that they can spend on these big celebrations, particularly since the pandemic. We are seeing a little bit of thoughtfulness around, am I going to spend on the highest quality ground beef, or am I going to spend on alcohol, and making a little bit of financial decisions there. But for the most part, people are excited to spend on the holiday and on their parties and barbecues. And then another big one, of course, is travel. So given the Thursday timing of the holiday, it makes for an easy 4-day weekend. Some people already left last weekend. And I think in general, unsurprisingly, we have had a bit of a resigned consumer lately. So it's been a nice opportunity for people to unplug and unwind. I know I'm getting emails from the Pittsburgh airport every day saying arrive 3 hours early for your flight.
Wow.
So everybody is out and about wanting to travel for the holiday and for the summer.
Katie, I am, as a consumer, I like to refer to myself as a frugal consumer. Maybe others, Tim, would call me a cheapskate.
No, I would not call you a we're cut from the same cloth.
Right. So whenever any holiday
I would call
comes
you a
up,
father to 3 kids. That's what I would call you.
That's right. They're the ones who call me a cheapskate, by the way.
Yeah,
yes.
they would, because you're
frugal consumer is my preferred nomenclature. But Katie, whenever there's a holiday coming up, I always wonder, there's got to be a sale somewhere, right? Is there any is July 4th a good time to go bargain hunting?
Yeah, absolutely. Mike, I like to call those people thoughtful or savvy consumers.
Ooh, yeah.
So, there's always a positive way to spin it.
I like that even better.
Yeah. Yeah, so there's a lot of great sales to be had this weekend. So you're seeing, some of your traditional July 4th sales across the board. Maybe, a website, the whole store is 25% off, things like that. Best Buy is having a major sale, a lot of those traditional retailers, but they're also ramping up into Amazon Prime sales. So those sort of associated mid-July sales. So you'll have a lot of opportunities across the board to buy, from now kind of through the middle of the month. Nordstrom anniversary sale. So you can really whatever you may be looking for, there should be a deal to be had within the next couple weeks.
Amazon Prime Day. Amazon is just off of records. And we saw Bezos sell quite a bit of stock today.
Yeah.
He's co-founder and chairman of the board. He's no longer CEO, we should note. Prime Day is going to be happening. I'm getting advertisements when I open the Amazon app right now. How do you watch Prime Day happening for, 2 days, I should say, this year? And what are you thinking ahead of it?
So one of the things we're always watching for is Prime Day originally, was part of a way to grow subscriptions. So I think that's still a philosophy they have there, is to bring in. A lot of people have Prime subscriptions now, so it's not quite as fruitful as it used to be. And it also provides a bit of an edge for some of the retailers having competing sales, because you don't necessarily need to have a subscription to shop the sales, which a lot of times will price match. The biggest thing I watch, though, is the items that are on sale and if they seem to be what consumers really want. So sometimes we see it really as an excuse to get rid of excess inventory or other business objectives. During the pandemic, everybody had air fryers on sale because everybody was sitting on a lot of air fryer inventory. So I think, when it comes to Prime Day, they've also done a lot where their own products are on sale. So if that's what you're looking for, great. If not, it may not be quite as lucrative as it once was, but we still find year over year, somehow they manage to beat their own records. So we certainly know consumers are shopping them and looking for the best bang for their buck.
Katie, obviously, inflation has been the top of mind topic for us here at Bloomberg. And when we're analyzing the markets and consumer behavior, it has cooled down from its peak pretty significantly. But I wondered if you could talk to us about how this inflation episode that we just lived through, how it changed consumer behavior, and is there any sort of reversion to normal now that inflation isn't quite as hot as it was a couple years ago?
Interestingly, lately we're seeing a consumer that's a little bit exhausted of all of the things that they've had to put up with. It tends to be a combination of politics feeding into how they feel about the economy. And so our consumer stress index, it's our take on consumer sentiment. Tim and I have talked about it before. Our latest version comes out in a couple weeks, and we're seeing just like US consumers are still feeling stressed, and it really is reflected in the politics and finances numbers. And so you have seen consumers, though, really make trade-offs. So it's been, it's not necessarily a broad market problem. I mean, when you think of every category, you have winners and losers, right? Like look at Abercrombie as a success story within apparel, whereas some of their competitors are having tougher years. So consumers are really doing this like both splurge and save mentality, seeking value in their day-to-day. Walmart's seen a great push as a result of that, high value perceptions, but they're also still wanting to live their lives and spend money. And so it's really striking that balance of again, where I'm going to spend, where I'm going to save.
Where are you seeing consumers make trade-offs?
I mean, that's a hard one to answer because it's really individual for consumers. And I think a prime example that we get caught up in generic narratives, I think, is when you take a look at something like concerts this summer. So for a long time, we've been talking about, even before the pandemic, people are spending on experiences over things. They want to be out doing things. And in fact, we've had a lot of concerts get canceled, low ticket sales. And that shows actually a bit of the misalignment we're seeing when we generalize consumers as a monolith. Everybody wants to go to concerts. It's for different reasons, right? Popularity, maybe the arenas were too big, so it lacks the intimacy a consumer actually wants, all of that. So I think like that's a great example of just trying to avoid generalization, but you are seeing one big bright spot, of course, is travel. Okay. So consumers within the US, around the world, people are still spending on travel. That's been a top priority.
Mike, any Taylor Swift concert attendees in your household?
It's funny. My one daughter actually went to the parking lot of talk about a cheapskate father. She went to the parking lot. And, there's like 30,000 kids there
just hanging out.
Lot. Yeah,
that's pretty awesome. Yeah, that works.
They had fun. Yeah.
Okay. There we go. That's one way to do it. I like that. I appreciate that. We do that in Brooklyn at the Park Slope Band Shell. Or Prospect Park Band Shell, yeah.
Nice. Katie, back to July 4th. I tend to think of it as this holiday that we can all sort of rally around. There's no religious element to it. But from what I understand, some people actually do boycott July 4th, which was surprising to me to learn that. Talk to us a little bit about what's going on there, and does it sort of have any effect on consumer spending as a result?
Yeah, the short answer, Mike, is it doesn't tend to have as much of a material effect. It's a little bit more social commentary. But what we do see is, as a result, particularly a few years ago, of Roe versus Wade being overturned, we saw some consumers boycott the holiday sort of in name. I think it was, again, like a social rallying cry around don't wear red, white, and blue, or perhaps we don't really want to support the country right now. We're not in agreement with the ideals. So we see talk of that, but it doesn't necessarily necessarily mean even they're not going to go to their family barbecue, right? So it is something that's discussed, like perhaps I'm not on board with America right now. But that being said, it doesn't tend to have a huge impact. And the other thing that's offsetting that, frankly, right now is the patriotism around the Olympics. So we've seen, just this weekend, Simone Biles, Suni Lee punch their tickets. And so that tends to bring out a little bit of our patriotism. So we haven't heard as much chatter about boycotts this year.
Katie, love it when you join us on the program. Thanks so much for taking the time. Katie Thomas is lead at the Kearney Consumer Institute, joining us from Pittsburgh, Pennsylvania.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.